One of the biggest lies that all traders tell themselves is profit is profit. Because most of the time, traders aren't closing winners early because they're disciplined. They're closing them because they're scared. They're scared of giving back profits. They're scared of being wrong. They're scared of their ego being hit. And they're scared that the market is about to reverse on them. And ironically, that fear is the exact reason why the majority of traders never become profitable. So welcome back to episode 2 of The Trader's Mind. My name's Brandon. I've been trading for over 4.5 years. I trade out here in Dubai full time. And in this series, we're breaking down the psychological factors which cause most traders to fail. Because the main reason why traders fail is not because of a strategy and not because of setups or indicators. It's because of their mindset. And today we're talking about one of the most common reasons why traders can never become profitable. And every profitable trader that I know, including myself, went through all of this. But it's what they did after which actually turned us profitable. So what's actually happening? Most traders think the issue is strategy, but really the issues are emotional discomfort. When a trade goes into profit, pressure starts to build up. And suddenly your brain is thinking, what if it does reverse? What if I lose this profit? And maybe I should just secure it now. And in that moment, closing early feels like a smart thing to do. It feels safe. But with trading, safety and profitability are not always the same thing. Because if your winners are consistently small compared to your losers, which are full-size losses, mathematically, you're going to make trading extremely hard over the long term. Imagine fishing for hours and you finally catch something. But then as soon as you reel it in, you hold it and you throw it straight back into the water because you're just nervous of holding this fish. That's basically what traders do. They do all the hard work. They wait for the setup. They know their strategy. They've done their analysis for the day, but then they sabotage the reward phase emotionally. And the crazy part is that most traders are more comfortable with losing than they are with holding profits and waiting for the profit to close at full size. Holding profits, it creates pressure. So what's the real psychology behind this? Your brain reacts differently to realized profits and unrealized profits. And if you don't know what that means, unrealized profits is your floating P&L if you haven't closed the trade yet. And your realized profits is once you close the trade. So when traders start to see green numbers and profit growing in that trade, they treat that unrealized profit as realized profit. Basically, as that money is already theirs. So even a small pullback feels painful because you might have been up $800, you're targeting maybe $1,500, but then it might pull back to $500. Now in your brain, you're still in profit, but you think that you've just lost $300. And the reason you feel this way is because of your brain. When you lose, emotionally, it hurts more than the feeling of winning for an equivalent win. So basically, if you lost $100, but you won $100, emotionally, with dopamine and everything like that in your brain, the loss you're going to feel a lot more, even though you had the equivalent win. So another huge reason why traders close their winners early, and especially beginner traders, is because they don't trust themselves. They don't trust themselves and they don't trust their system. Deep down, they don't know if their edge fully works over time because they haven't been doing it long enough. And that's why you're basically micromanaging every single candle, a minute candle, a 5-minute candle, or even a second candle. And you're starting to react to these tiny high frequency movements. So every pullback feels dangerous, every wick feels like a reversal, and eventually your fear takes over and you close that trade. And sometimes if you've been trading for a longer period of time, you have trauma over past trades. You might not think of it as that way, but you do. Because if you've had previous experiences, which we have all had, where you've had a nice big trade running in profit, you've been waiting for it to hit your take profit, and then it reverses and it hits your stop loss. We've all been through that. And you, in your mind, want to mitigate that happening again. So the moment you see green, you just want to take that profit so it doesn't hit you emotionally, so it doesn't hit your ego that you lost again. But the issue is if you're trading based on fear, you're going to be inconsistent in following your rules, your plan, and your P&L. Your edge is going to be all over the place. And as I mentioned earlier, closing your winners early destroys your consistency. It quietly destroys your risk to reward. And risk to reward, honestly, is one of the biggest factors to profitability. Because for example, if you're risking 1% of your account, but you're only taking profit at 0.3%, eventually, even with a good win rate, you're going to struggle to survive. Because you might think to yourself, well, at least I'm winning. But if you're only taking 0.3%, one loss with a 1% risk will wipe out 3 consecutive wins. Actually, it will wipe out a little bit more. So now you're constantly wiring your brain to have to win every single trade. And we all know that's not possible. It destroys your consistency and it destroys you from becoming a profitable trader. You need to have a positive risk to reward. You need to, or even, an equilibrium, a 1-to-1 or a 1-to-2 or a 1-to-3. But if you're starting to go into the negative, that is going to be a big issue over the long run. So how are you actually going to fix this? I've broken it down into 4 rules, which I use myself. Rule 1 is you need to pre-plan your exits. So before entering that trade, you need to know exactly where you're going to take your profit. And it needs to be at some sort of key level, not just a random number on the screen. So when you're in that trade, because when you're in that trade, your emotions are all over the place, regardless of how good of a trader you are. You're not thinking clearly. But before you enter that trade, you are. So when you decide on your take profit, you need to do it before you enter the trade. You need to hold it, because now you're not thinking emotionally when you set that take profit. You're thinking logically. And any edits to that trade while it's placed are purely emotional decisions, not logical. And rule 2, you need to accept pullbacks. Winning trades do not move perfectly. You don't enter the trade and it flies straight up to your take profit. And this is important because even in a strong trend, the market has pullbacks. And if you panic every time price slightly retraces, you'll never catch the larger moves. You'll never be able to be in your trade long enough to gain that decent win, to have that good risk to reward, to be profitable. So you need to accept pullbacks. They're literally part of the market, part of trading. It happens every single day. And rule 3, you need to focus on execution and not money. The second you're staring at your P&L too much, emotions increase massively. Instead, you need to focus on, am I following my plan? Am I following my rules? Am I following my judgment that I made before I placed this trade, before my emotions start to take over my body? So stop thinking about how much you're up, just think about if you were correct or wrong. And rule 4, I don't tend to do this now, but it might help a lot of you guys, and that's take partials. Because for a lot of traders, it really does help you psychologically. Because taking partials can reduce the emotional pressure while still allowing winners to reach the key level of a take profit that you were targeting. But the key is with partials, it needs to be structured, can't be emotional. So if you are going to take partials, you need to know before you even start a trade that you're going to take them. Is there multiple, say 3 key levels that you're thinking your trade is going to hit? Set one partial, a second partial, then the final take profit. But you need to decide on these whilst you're thinking logically. So at the end of the day, closing winners early is purely out of fear. Fear of losing profit, fear of uncertainty, and fear of trusting the process. But trading rewards patience a lot more than emotional comfort. And if you constantly are cutting your winners short, eventually your account growth is going to get capped by your own psychology. And the traders who grow in the long run, they're not necessarily the smartest traders. I certainly not. But they're the ones who can stay emotionally controlled whilst the trade develops. So if you enjoyed this video, please feel free to like and subscribe. And if you are really struggling with your psychology, discipline, and risk management, I have a completely free Telegram group for you guys to join. If you click the link below in the description, that'll take you to my website. You can click the link to join the free Telegram group there. And there's also a lot of other things for you guys to use as well. You can book a one-on-one coaching call with myself. We can really do a personal deep dive into your psychology. There's a free trading plan builder. So if you don't have a solid trading plan, you can create one for completely free. And I also have a trading journal, which will connect to your trading plan. So when you're trading, you know exactly if you're following all these rules, and it does that for you automatically. So if you want to use any of that, please feel free to click the link below, and I'll see you tomorrow in the next video.